As you know, I have been rather optimistic in the face of very pessimistic news coming out of Europe and other parts of the world. I believe this year will be a good year for Europe to reach an agreement amongst the various nations in the European community to improve the fiscal responsibility of the individual nations. There will be stronger monitoring, there will be changes in the way governments run, and I believe Europe will emerge much stronger than it ever has been up to this point. That also goes for the euro, the currency. I don't think any country will leave the euro. It is a good currency, will be used widely, and will become more and more important as we go forward. Now, what's the outlook for China? Everybody's been worrying about China. It has underperformed, and many of the reasons for this underperformance can be tracked to the large number of IPOs and secondary issues. As you know, in 2010, over 500 billion in new issues came into the market in emerging markets. Almost half of that was from China. So there was a tendency for money to go from the secondary market to the primary market, the IPO market, and thereby keeping prices in the secondary market low. This last year, we found 2011 a much lower level of IPOs, half of what it was in 2010. So I believe this year will be much, much better. 2012 would be much better for the Chinese market. India is in a similar position as China insofar as so much money was drawn out of the secondary market into the primary market. That's over, and I believe you're going to see a resurgence of activity in the Indian market. As you know, we are heavily invested and continue to invest in India. We see from a longer-term perspective lots of growth. We believe that this problem with corruption has been dealt with, is behind us, and now we can move forward. Now, what sectors are we bullish on? It hasn't changed very much. We continue to like commodities, particularly commodities related to energy, because as we travel around the world, there are increasing shortages of electric power. That means oil and coal will continue to be moving up in the trend that we've seen over the last 20 years. The trend line for those commodities in dollar terms will continue to go up. The second area is consumers. We like consumer stocks, particularly in India, because there's a growing middle class, higher per capita income in India, China, and all these other countries, and of course it's a huge market. So we want to be focused on consumers.